Hi traders, in this video I'm gonna be showing you how I trade week in, week out, day in, day out. Okay, so here I'm gonna be looking at EURUSD on the daily time frame. This is EURUSD, and then this is the cable GBP USD pair. Right, so it is on the daily time frame as well. That's where I look for buyers. That's where I look for buyers, my weekly buyers and daily buyers. So I'm gonna be showing you, giving you tips of how to quickly get the weekly buyers or daily buyers so that you trade in line with smart money traders, with institutions, with inner circle traders. Okay, so right here I'm gonna be focusing on this current trading week. This is Thursday here. This is today's trading candle here. Thursday, Wednesday, Tuesday, Monday. This small candle here is Sunday. Alright, same thing here on the cable. Thursday, Wednesday, Tuesday, Monday, and this is Sunday. Alright, so quickly, how do I look for my weekly buyers? It's easy. Okay, pay attention to daily candles. How are they printed? Okay, ask yourself what daily candles are actually doing. Alright, just like here for this current trading week, this was Sunday, Monday, Tuesday. We can clearly see that normally if you trade ICT concepts, you know that Mondays are not good trading days. So we wait for Tuesdays, Wednesdays, Thursdays, and Fridays. Okay, especially if on Friday there is no very high impact news like NFP. So we do trade Friday if it is safe, if there is no NFP or NFP, and normally it's NFP because FOMC normally is not released on Fridays. Okay, so Tuesday, Wednesday, Thursday, and Friday are our trading days. So I normally wait for Tuesday. I want to see how Monday trades, and then from Monday's trading I can see the bias of the week. If Monday is not clear according to the market structure, okay, I'll then wait for Tuesday to print Tuesday's candle, and then from Tuesday's candle I will then be able to tell if the bias is bullish or bearish. So here this week we had this low here. This was a weekly low, last week's low right here, which was formed on a Thursday. This was Friday. We reverse it. It has been a very nice bearish week. Friday, price reverse into weekly range, and then we close up there. This was Sunday's trading. Monday we open, we trade down. But look, as I said, pay attention to daily candles. Pay very attention. Look at this sell on Monday. The candle body of this red down close candle of Monday's trading never gets below the candle bodies of Friday and Thursday. Can you see that? It's respecting that price level. Very, 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 very nice. If you take a look at Monday's trading here, we just have a consolidation. This is a consolidation. a very low range day, okay, because the candle body, the open and close of this Monday's trading day are very close to each other. So this is a consolidation. We have a doji candle, whilst Monday went down aggressively but never went below these candle bodies here. This is why are we paying attention to candle bodies, candle closes and opens? It's because the bulk volume of trading is seen by the open and close. Okay, if you want to read true price action, learn to use the actual open and closing prices of these candlesticks. So as I've said, this is a very small candle compared to this one on Monday, which can tell you that this was a fake buy. This was a fake sell. It never went below these candle bodies right here, whilst this one never went down aggressively like this one. So this is some sort of what? SMT, smart money tool. Okay, consolidation while this one is trending down. Okay, number two, on Tuesday we open here, we trade lower. This week never goes below this Thursday's low. There's no liquidity sweep here, whilst on Tuesday this one now trades aggressively down. Remember, it refused to go down aggressively on Monday, while this one went down aggressively, but candle bodies told us the correct story, that this is not an actual sell. Okay, smart money is just manipulating uninformed traders thinking that it is going to go down. Okay, look at the candle close on Monday. It respects this level of these two candle bodies here, the close of this down close candle and the open of this up close candle. We respect it with this candle body. This is pure strength, pure sign that smart money is actually buying. When this went down like this, smart money was actually buying. We've seen that this confirms that indeed this is a fake sell. We just have a consolidation right here. On Tuesday, this one trades lower aggressively, grabbing liquidity below last week's low. This is Friday's low, which marks the last week's low, whilst this one never went below last week's low. So this was a fake sell. On Monday, EURUSD gives us a fake sell. On Tuesday, this one gives a fake sell and rejects aggressively, closing Tuesday with a bullish hammer. Alright, so when Tuesday closed like this, creating this SMT divergence, I knew that our weekly range is gonna be bullish. My bias for this week is bullish. And then on Wednesday, I looked for opportunities to buy on smaller time frames. Okay, so I'm going to show you how I traded on Wednesday. Very nice trade I had here, and today being Thursday right here. So now, seeing that this one went below grabbing liquidity and this one refused to go below on Tuesday, which means that EURUSD is gonna be very bullish. It never went below, while this one went below, which means smart money is actually buying EURUSD aggressively. We want to trade EURUSD. Okay, we want to trade EURUSD. So now a bonus again here. Look, we just took this liquidity right here. Same thing here, we went below these lows, grabbing liquidity, which means we can now target internal range liquidity. We took external range liquidity below an old daily low. We can now target imbalances, which is our internal range liquidity. So all of this, what I've just clarified here, is actually happening after grabbing liquidity below old daily low. Okay, so we can look at this guy here as our next target. This is our imbalance right here. Very nice one here. So price trades down and up. We open here, we trade all the way down, re-delivering at this price action here. This is what we call re-delivered, rebalanced. Okay, so we close here, this one opens and closed all the way down below this one, below this re-delivered, rebalanced. Therefore this is our fair value gap here. We ignore this price action here. This is our fair value gap right here. So buying down here, we are bullish, targeting this imbalance here. If price close aggressively above here, we can then look for higher prices to target. Next liquidity will be above this guy here, this old daily high. If we close aggressively above, this shaded area is gonna act as support, taking price up to this next liquidity pool, resting above this old daily high right here. So now, for the fact that for this week I've outlined my bias, okay, we can then go to smaller time frames and focus on Wednesday and this day and see how you can take your buys. Okay, so with that said, I'm going to expand this chart and focus on EURUSD because it's the one that I'm looking to buy. Okay, it is gonna be the one that is very bullish, as you can see, because it never went below this low, while GBPUSD went below last week's low. Alright, so now my rules: if my bias is clear on daily time frame, I then look for H4 time frame to confirm the daily time frame bias by giving me H4 time frame order flow, okay, by means of fair value gaps. I want to see imbalances, fair value gaps on H4 time frame, confirming my daily bias. Alright, so let's switch to H4 time frame. Let me put these daily separators again. So right here, what I have is I'm now going to remove this fair value gap that we annotated on daily, remember. Okay, I'm removing it because I want to keep the charts very clean. So we open on Monday, we trade lower, Tuesday lower, and then you start to move up. Okay, so this was Tuesday movement right here, Tuesday's movement. Okay, now we had this fair value gap here on H4. Okay, we trade into that, inside that fair value gap on H4, and we go up, right? Come Tuesday, Tuesday's trading, as you can see here, this is on the 15th of October. Okay, 15th of October. Here, this is 14th October. So this is Tuesday's trading, the day where I'm looking to take my long trades, right? Because Monday, Tuesday has shown us that we are bullish. We open the week, we go down, fake sell, and then boom, Tuesdays gives us a nice weekly direction. So we had fair value gap here on H4, confirming the bias that we just outlined on daily. We see nice bullish order flow taking place. Fair value gap, trade into that fair value gap, we go up. Now on Wednesday, okay, because Tuesday was actually giving us the direction this week. Tuesday gave us clear direction, and then we want to see bullish order flow on H4 on Wednesday. That's where we are going to take trades from. Okay, on H4 order flow or H1 order flow. Those are my intraday higher time frames. As a day trader, those are my intraday higher time frames, H1, H4. So H4, we have a very nice bullish order block here created. We trade into it, boom. This is where I took a very nice buy during this day, 15th of October, which is Wednesday, right here, when we traded into this guy right here, H4 fair value gap. So we can annotate that. We have H4 fair value gap right here. If we have this H4 fair value gap, we now know that this is gonna be our target from fair value gap to target this high. Okay, so H1 time frame, there's no need to look at H1 because H4 has already given us fair value gap that we can work with. So from H4 we can go straight to M15 or M5 time frame. But if we take a look at this high here, you will notice that this high is in line or overlaps with fair value gap, H4 fair value gap, which makes a very strong order flow or imbalance. Okay, we have two things supporting each other, old or yesterday's high. I wanted to say all day high, but it's just yesterday's high. Okay, we're gonna have very nice sensitivity right there, as you can see, combining that high with H4 fair value gap. It's a very strong area to look for buys. Okay, so switching to M15, we now know that we have fair value gap on H4, which is rule number 2. After having very nice clear bias on daily, we want to see H4 time frame confirming or supporting the daily bias. Okay, so H4 supported daily bias by this bullish fair value gap, which overlaps with a daily high or yesterday's high right here. So price on Wednesday trades up, it comes back down during London session into H4 fair value gap and yesterday's high. This is where we expect our buys to form. Alright, so with that said, here on M15, we can clearly see that this is what happened. My setup here was very clear. Now when H4 gives us order flow, or M15 gives us order flow confirming our daily bias, we simply wait on 15-minute time frame or 5-minute time frame setups. If we get bullish setups on 5-minute or 15-minute time frame, we then take those entry setups. So here on M15, rule number 3, we look for our execution setups, which is gonna be our shift in market structure with fair value gaps, nothing else. Okay, if you know the 2022 ICT model, it's exactly that we are looking for. All right, simple and straightforward. So what happened here is, let me mark I want to mark the New York session. Okay, let me use vertical line here. Vertical line, let me use the vertical line, right? So my New York session, New York open begins here. This is the New York open right here. Let me make this one blue. Oh, sorry, let me make it green. Let's see. Okay, this is my New York session open right here, and this is our New York midnight time open right here. So if we are bullish, we want to trade, we want to see our bullishness begins from or below the New York midnight time open. So we opened here, as you can see, we were below New York midnight time open right here. We trade lower and go up during London session, and then come down as well during London session into New York. So all of my entry setup here, my execution function here formed right at a very nice place below the New York midnight time open. If we are bullish, we want to trade below, we want to take our trades below New York midnight time or at New York midnight time open. Right, simple and straightforward. That's gonna be a very nice trade if you got a setup like that, just like this one. As you can see, price hit our yesterday's high, H4 fair value gap. We expect sensitivity right there, right at the right time, New York kill zone. We then boom shift the market structure right here, giving us that confirmation that indeed smart money is buying here. So this is our New York midnight time open right here. New York midnight time open. Right here. New York midnight time NMT open price. Okay, New York midnight time open, shifting market structure right here. We can annotate that as well. SS for shifting market structure, and then we get our bullish fair value gap. However, here we have two, this fair value gap and this one here, so we can mark all the way up to this one, bullish fair value gap. Price then, after shifting, giving that first signal that we are bullish, after reaching this nice area that we annotated our higher time frame order flow, we get that bullishness, and then we wait for price to trade back into fair value gap, either this one or this one. That's where I took my very nice buy right there. I managed to get 1 to 3 R trade right here, targeting this guy here, taking a buy down here, targeting this high. This is my draw on liquidity. DOL stands for draw on liquidity. Simple and straightforward. Nice buy right here. You can put your buy limit order just below this fair value gap high right here, or down here, down close candle, your bullish order block with fair value gap, put your buy limit order there, protect below this low of the setup. Alright, mine, I came all the way down to this guy here. That's where I put my entry setup. If you like, you can use Fibonacci tool from the low of the high of this first signal of bullishness. Okay, this up move that gives us market structure shift. You can wait for price to return to 62% OTE. You get a buy right there, put your buy limit order, or just at 50% equilibrium, put your buy limit order, protect below. Any of those, because if we have two fair value gaps like this, price can do exactly as it did here, going for the first fair value gap right here into 62% OTE right here. These candle bodies never reach the 62% OTE, these two candle bodies here. With this one, we open, shoots down, straight down to 62% OTE, boom, very nice buy right there. So I used this fair value gap high here as my entry, protected below. I managed to get 3 R, risking 1. Okay, a very nice trade right there on Wednesday. Today being Tuesday as well, we have very same. Okay, I can annotate this one as well. Yesterday's high, YL stands for yesterday's high. So whenever you see me annotating like this on my chart, just know that it's yesterday's high. Fair value gap, market structure shift. DOL stands for draw on liquidity. Okay, so that's how I annotate my chart. Okay, NMT, New York Midnight Time open right here. So we know that before this New York Midnight Time open vertical line here, this is Asian session. So Asian session was bullish into consolidation as we are approaching the London session. Consolidation, consolidation, consolidation. We open, we trade lower a bit, and then boom, it go up. Okay, simple and straightforward. I'm done with Wednesday's trading. Now we can shift this to this day here. Now this is our New York Midnight Time vertical line. This was Asian session. Let's get our New York open session. Okay, New York kill zone, same thing here. We have our yesterday's high right there. YL right, YL right there. We come down to it, we consolidate around it, go up. Okay, this is the beginning of our New York kill zone open. So Asian session has been bullish as well. Okay, London been bearish. Okay, and then consolidation into New York open. Okay, right here, let's go to either H4 and see if we had any H4 order flow, okay, to support our bullish bias. Already remember, we are trading above yesterday's high, which if we were above like this, we can have sensitivity to go up from there. This is the first point for today's bias as well. This is our first point of confirmation of longs. We can expect this yesterday's high to act as support, just like it did here. So let's switch to H4 and see if we had any fair value gap. On H4 we didn't have any fair value gap, as you can see, no H4 fair value gap right here. Let's see H1 time frame. Yes, we did have fair value gap, which is this one. So we do have our intraday higher time frame order flow confirming our bullishness. Okay, our daily bullishness. Okay, right here. So today we have H1 fair value gap. Let's change this to H1 fair value gap right there. Let's annotate it. H1 fair value gap, which overlaps with yesterday's high. Therefore this is gonna be our draw on liquidity up there. Okay, we do have our New York midnight time open. Okay, we're going to take it on smaller time frames. Okay, we have a problem taking this line. Why is it not okay? So our New York midnight time open, horizontal line right there. Right there. We annotate it. Okay, we said we wanna buy at or below the New York midnight time open if we are bullish. Same thing applies when we are bearish. We wanna sell at or above New York midnight time open if we are bearish. Okay, on daily time frame. In this case, you are bullish on daily time frame. Okay, so now New York session, we find that okay, we traded all the way up during the Asian session. We create that initial high of day. Asian session, we then come down. Okay, London session open, we never go above it, we stay below up until New York kill zone. Alright, higher time frame, our intraday higher time frame, H1 gave us order flow confirming our bullishness on daily. So this is where we want to see our setup form on this H1 fair value gap, targeting this initial high of day right here. Same thing as Wednesday. This was initial high of day. That's what we targeted. Boom, from H4 order flow. So same thing applies here. Let's see how it happened. Remember, this is H1, this was H4. We got a very nice setup on M15. Let's switch to 5-minute time frame and see if there is no nice setup here on 5-minute time frame, because this is now on H1. Remember, so H time frame can give us something clean because we have H1 fair value gap. Let's see what transpired here. We hit it. Yesterday's high, H1 fair value gap. Okay, stay inside up until up until what? Up until New York kill zone. So what do we have here? Let's look for our market structure shift. Market structure shift happened on M5 here. We have this high, candle to the left, candle to the right, a high, that's a short-term high. This is our market structure shift right here. Okay, when we traded nicely above it, creating this fair value gap, that's when we knew that okay, we are now buying. Our setup is formed successfully, confirmed by this bullish fair value gap right here. This one went above and this week went above, it's okay, but there is no fair value gap, so we want to see fair value gap. After this guy closed above like this, we then created fair value gap. It's a nice one. We can then be buyers at the high of this fair value gap, or middle of this fair value gap, or the overlap of this short-term swing high which we broke. Okay, the market structure shift, you can be a buyer right at this market structure shift inside fair value gap and protect below this low here. Few pips below this low, price trade all the way down, it never goes below this low. Even if it did, it never goes below it. As you can see, protecting few pips below it, you were safe. Or to be more safer, protect below this one here. Okay, if you are too conservative, below this low, because remember this is a setup right here. The setup is very big. We broke this high, we shifted up in this high, so price can retrace all the way. The strongest low that I really don't want to see them taking out is this low right here. From this low we went all the way up, breaking this high, so they can retrace all the way, taking out this high and even this high, but this one should be respected. So the safest one is this one. Okay, but to minimize your stop loss, at least this guy here, or few pips below this low here. It never went below this low. Okay, very nice strong push from that one. They respected it. Very strong push right there. So protecting below it here, it was still fine. Okay, so a very nice trade I took as well here, using this nice setup after market structure shift. Boom, targeting this guy. I had my 1 2 3 trade. It went up aggressively afterward. Okay, we can clearly see that he also traded back into this fair value gap here on 5-minute time frame as well. Very nice one. Down close candles, bullish order block right there with fair value gap. You can scale in right there. You can scale in right there. This is still within the New York kill zone. Okay, London close, nice buy. You missed this one, this buy, you have fair value gap here, you can take a trade up there, protect below the candle bodies here. Nice push to the upside. So guys, this is how I trade. I hope you find this video very insightful. Please give it a thumbs up, subscribe, share the video with other fellow traders to also learn and grow with us here in this community. We are actually building a very strong community of traders, ICT traders, that will trade and live off of trading. Thank you so much if you watched up to this far. See you on the next one.